Rising concerns over inflation and more tariffs halting Americans from hitting the checkout line. Here with us now is Doug Flynn. He's co-founder of Flynn Zito Capital Management. So, Doug, thanks for being with us. I don't know. I see a lot of people at the checkout counter, but we hear that consumer confidence is down again. So what exactly does it say about Americans' willingness to spend? I know a lot of people that are still spending. What about you?
There are definitely people still spending, and that's what happens with a lot of these surveys. They're sort of in the aggregate. When you drill down, there's always somebody who might not be doing as well as somebody else. Actually, in this thing that came out today, it's making all the news. When you drill down, most of this is happening to the 55-plus age group, where the most concern is. If you peel back a little bit, those that make over $125,000 a year and those under age 35, actually the sentiment rose. So while it's a horrible number and it's sort of forecasting recession, it's really focused in on those 55-plus people who are concerned. I think it's a lot of the confusion about the tariffs and whether we're going to go into a recession. But for example, eggs dropping 64% from the beginning of the month, by the way, to like below $3. Is not in this survey. That'll be in the next one. So we'll see how it plays out from the next one.
Right. Yeah, I know people that are racing to go get a car before those car prices go up. They believe, you just don't know how this is going to play out. But I'm curious how this report gives us an idea on the state of the economy overall. It sounds like you just mentioned it there, wait until the next report comes. But as you see it today, overall, how does it look?
Yeah, people are definitely beginning to struggle. The economy has been showing signs of weakening little by little. Debt service, for example, people that are delinquent is beginning to rise. So, around the edges, those people are having some trouble. They've run out of the excess cash they have. And so as the economy weakens, that's actually what you want in a weird way, to have interest rates come down to kind of get that going again. So you're kind of at odds. You want lower rates, but you don't want the economy to weaken too much. So we're back to the point of it is showing signs of weakening. And I think a lot of this is sort of bucked up against the April 2nd tariff date. We'll see, if we can get through that, get on the other side. We need more certainty so people feel more comfortable, I think.
While consumer spending is falling, we also want to talk about the stock market because it's beginning to rebound. What gives a better indication on how our economy is doing? Is it the stock market? Is it the spending? Is it all of it? What is it that you're looking at? I want to peek over your shoulder.
Well, the market is usually an indicator of like what's to come 6 months from now is a good way to think about it. So you're kind of planning ahead and trying to skate to where the puck is going rather than where it is at the current moment. So look, all of this gets baked into the estimates on whether or not consumers are going to continue to spend, because if they continue to spend, that adds to the earnings, and the earnings of those companies are ultimately what drives stock prices. So the way to think about it is, in the short run, the market can be insane. In the long run, it's a genius. It works out exactly how you'd expect it to. The companies that make the most money, that sell the most, are going to continue to do well. And so in the near term, where there's that volatility and that uncertainty, it makes sense that you bounced up against a correction, and now we're recovering a little bit, as Trump's talking about maybe not having as wide-ranging tariffs. We're kind of narrowing in on that. But again, get on the other side of that, and longer term, that's where you want to be. I always say Apple doesn't care who the president is or what's going on at the moment. They're going to sell a bunch of iPhones to a bunch of people.
You've got that right. And I'm also curious about your phone. Your phone is ringing, I bet, off the hook right now with people calling with concerns. And it seems that tariff fears are easing. So for now, can you expect this trend to continue as we do get closer? You mentioned the April 2nd date. Are people asking you about that?
Yeah, there's clearly, with the volatility, some people are concerned and saying, should I be more conservative? Other people are saying, really, I think the majority of people that we're hearing are saying, I think 6 months from now, it's going to open up and all this is going to become a positive. So maybe I take this opportunity while things are off a bit to add into the market, again, for money that is really long-term, your 401k, your 10-year plus money. That's what you kind of want to do, is take advantage of that little bit of a sale that might be happening. And it's already come back a little bit. So I do see more of that. But admittedly, if you're getting close to needing the money, you want to take that money off the table and maybe not suffer the ups and downs that we're seeing every day.
All right. We're going to roll with it. Doug Flynn, thank you so much for your time. Appreciate you. We've got more news.